Hey everybody, and welcome to another episode here at Tribal Trades, the daily show coming at you from the great state of Florida. One hell of a drug. And I do want to welcome you to the channel wherever you are tuning in from around the world. Thanks for watching. Today we're going to ask the question, is the market going to take a tumble because we have the rate cuts being announced, or rate hikes, or rate pauses, the rate decision? And of course, the Fed is going to talk about half an hour after that. We're going to discuss all of that and a whole lot more. We're going to look at the charts. But before we jump into all that, smash the like button. This does help get this channel out to more people, and of course does help support the channel, as does your wonderful comments that you take the time to leave below. Thank you so much for that. All right, so let's jump into a little bit of tongue-in-cheek here from Crypto Goose. The Bitcoin crash is just getting started, but they've actually inverted the chart there on what they think is going to happen. Bitcoin apparently going to $240,000. A little bit of tongue-in-cheek there from Crypto Goose. But we know now, Jim Cramer, there's no way Bitcoin's going to $1 million. So we now know Bitcoin is going to $1 million if you're part of the inverse Cramer crew, as such as I am. And then, of course, we do have a lot of USDT just getting minted in anticipation. We could have some good news, and maybe for once, Fed Powell is not going to dump the market, but is going to pump the market instead. And of course, we all have that friend, just for a little bit of humor before we check out the charts, we all have that friend, tag that friend on X, the crypto market in flames. What meme coins are we buying there? There are some people out there still asking, still looking to do that. Okay. All right. So let's jump into the Bitcoin charts here. And what you can see here is quite bearish. It is quite bearish. We're below the 200-day moving average. We're below the 200 EMA on the daily. For those of you regular watchers, you know what we're looking for. We don't want to see a close below the 50-week moving average, a full candle open and close. Over the last decade, over the last 10 years, any time that's happened, bear market, the bull has been over. So those of you asking, are we still in a bull market? Absolutely, I believe so. Could we be going into a bear market? Possibly, if we get a full weekly candle, both open and close, below the 50-week moving average, currently at $75,921 there, okay? So we have the rate decision, the federal rate decision coming up. The market is pricing a whopping 99% that it's going to stay the same. Then people want to see what the Fed is going to forecast for future, the dot plot, the Fed dot plot of what they're going to forecast for future meetings, and whether they see rate cuts on the cards as probabilities for the next few meetings coming up in May and June. Now, also then people are thinking about, what is Powell going to come out and say? Is he going to pump the markets? Now, all the data has been good. I'm not seeing any negativity there. And so the market, it feels like the market's expecting he's going to be dovish and talk about the probability of rate cuts coming in either May, June, or both. Now, of course, we see the 200-day moving average there. And for me, my play is to wait to see how the market reacts and respond accordingly. That he's very hawkish and bearish, then we can open shorts to the downside. And if he's very dovish and bullish, then we look at open longs to the upside and going long and going in. Now, it doesn't mean that this pump, any kind of a pump, can be sustained. It might just be a little bit of a move to the 200 EMA on the daily there at 85,000 and back down again, or even possibly up to the 220 EMA on the weekly up at around 88,000, for example, or maybe even a little bit higher up to this 90,000. I would not expect us to breach this 90,000 anytime soon or easily, especially since the 50-day moving average is at 91,800 right now. So there's a lot of resistance on the way up. And of course, if it was very bearish, then of course we could see a move to the downside. We actually might get up and test that 200-day moving average right now. The way things are moving up from yesterday's low, we have certainly pumped up a fair amount from 81,100 there up to, so far we're almost at 84,000, and this 100-day moving average is at 84,400. For those that are listening, I appreciate you tuning in there. And so, as you can see here, you could have made a lot of money just shorting off the 200-day moving average. In fact, this is what we've been teaching people in the Tribal Trades Discord. One Discord to rule them all. We have the Leverage Lounge in there, aka the party zone, where people are printing money, helping each other find financial freedom by learning how to make money, not just when the market goes up, but also when the market goes down or goes sideways, and you can make money as it goes up and down. If you'd like more information on how to do that, you can find it in the description of this video. You just click the little more button. That will pop out, and you'll see an email address there. And we're going to open up for a few people this week. You can get in exclusive access to the Tribal Trades Discord. As a closed group. It's by invitation only. I'm inviting you to send me an email. The email is in the description below, and you can get more information about pricing and how that works there. And of course, you can even short this with 1x leverage. 1x leverage, that's the same as a spot buy. You can do a spot buy here at the 200-day and make money every time it went down. 1, 2, 3, 4, 5, 6, 7, 8 days out of the last 9 days, you could have been printing money rather than crying tears that your portfolio is in tatters and down. You could be crying tears of happiness, making money every time there is a red candle to the downside. Again, teaching leverage, teaching you how to short, teaching you even can use 1x leverage. Okay, that's like a spot buy to the downside there. Also in the Stocks with Josh Discord there as well. Big shout out to the amazing SWJ community. I've been doing some leverage trading sessions in there as well. People are learning how to trade leverage, how to make money in any kind of market. There are links below. You can sign up for that. That's open. You can sign up right away for that. I have my own Crown Traders channel in there where I share education, insights, resources, trade setups, leverage, leverage trading, as well as entertainment, because this is not financial advice. I'm not a financial advisor. For education and entertainment purposes only. You're not entertained, and you should be, because you can make money to both the upside and the downside if you learn the Tribal Trades leverage way there. Okay, and so the 200-day moving average. Now to the upside, if we get some kind of a very dovish statements, like if he's overly fawning on the dovish side, then we could see quite a nice rally to the upside here through to the main meeting, where it could be a bit of a buy the news, buy the rumor, sell the news event with some rate cuts there if it's expected. I would be quite surprised if we didn't get some kind of rate cut in May or June, as long as obviously the inflation data continues to drop. Let's check out the yellow brick road, because we're going to follow the yellow brick road. Follow the yellow brick road. We're off to see the wizard, the wonderful Wizard of Oz. And yesterday we talked about the possibility of it going up first before coming down to get this liquidity down here at 80. And that's exactly what it's doing at the moment. We've seen a little bit of a move to the upside there. We came down and got liquidity, and now we've got this liquidity to the upside at 85, 86,000. So I wouldn't be surprised if we came up and got this first, had a little bit of a rally up here to the upside, maybe even got as high as 90,000 or 88,000, 88 to 90,000 there. You can see there's a lot of liquidity there, all the way up to 95, 97, up to 100,000 there. There's a little bit to the downside there, down around low 80,000. Again, if I'm the market maker, I do want to come down and get this liquidity down here at 74. But everybody's expecting this. Everybody's expecting 69 to 73,000 to get tagged. And what if it doesn't? What if it just gets left behind and all your buy orders get left behind? I'm expecting it to come down and tag that area as well, but I'm also expecting to come up and get these billions of dollars that are sitting at 95,000, 97,000, 100,000, 107,000, 109,000, billions and billions of dollars now to the upside. All the people who believe that the market was over, they're shorting the market. And when you do look at it, you can see the possibility that in the April 2021, I've been telling people all along, this feels like April 2021 again, where we went down for 2 months. Now we've gone down for 2 months. We go sideways for a month, and then we pop. And that's the feeling that I've generally had with this drop, okay? And when we did drop in April 2021, we did close below the 50-week moving average. We didn't have a full candle open and close before it, but we did have a couple of candles close below it. And we haven't even had a candle close below the 50 EMA on the weekly, let alone the 50-week moving average. So there is still some room to the downside, because I do still believe that the bull market is on. Now, if the bull market's over, we're just going to lose this, have a candle open and close, exit the market, we're done. However, a couple of closes below these areas would be great buy the dip opportunities, in my opinion, because of the probability that we are still in a bull market, especially with rate cuts seemingly on the cards for May and June. Now, Jerome Powell could rain on this parade being very bearish, but just because he says or he's fairly bearish doesn't mean that there won't become rate cuts in May or June, because I can tell you, get another couple of months of inflation data coming down low, unemployment up, and other factors, economic factors leading to rate cuts. And he was prepared to cut rate cuts last year, and he did so. So I do feel that that is on the cards, regardless of what he might say in the meeting. And so, as you can see here, what do we want to see here to the upside? We want to see a break above the 200-day moving average, and we want to see a close. We haven't seen any candle close above since the 8th of March. Since the 8th of March, this was our last candle open and close. We want to see a full candle open and close above the 200-day moving average, and then get back above the 200 EMA on the daily. Remember, I showed you historically in a bull market, buying in or around the 200 EMA on the daily has generally ended up being a fantastic buying opportunity, as long as we are still in a bull market, of course. And I did show on previous shows, I'm not going to show again today because I've showed it numerous times here now, that we don't usually stay very long below, usually just a number of weeks below, and we don't go very far below the 200 EMA on the daily, and we haven't really gone that far below, not like major. This is a little bit deeper than I would have expected on the 200 EMA on the daily, but when I see these indicators down here, it's because Bitcoin had such a parabolic move to the upside, which is why. But then we just have all these areas up here where we've got the 20 EMA on the weekly time frame. That's going to be resistance there, over there. And if we actually go to the weekly time frame, historically speaking, these are between the 20 EMA. When Bitcoin is between the 20 EMA on the weekly and the 50 EMA on the weekly, historically has been a time to accumulate. And look where Bitcoin is right now. Again, we don't want to lose and have a big candle open and close below the 50 EMA and below the 50-week moving average. But right in here is the accumulation zone, which what I expect would be, and could last another week, month. Much of it will depend on today's meeting, which is why I'm not taking any trades today right now. I'm waiting. I've done some buys around the 200-day moving average and the 200 EMA on the daily. Even had a nice little buy down here on the 50 EMA on the weekly time frame there, waiting to see what happens when, first of all, want to see the rate cut decision come in as no change, or that there are going to be cuts that would really turn the market on its head. It's not expecting that. That's not priced in. That's going to send everything up heavily. So be prepared to jump in on trades if that was to happen. And then number two, if rate cuts do remain unchanged as the market expects, that if the Fed Powell is very dovish, I think we can expect some nice upside, at least in the short to medium term. And if he's very bearish or hawkish, I think we will see some more downside to lower. And look, even if he is very dovish in today's meeting, doesn't mean that we're out of the woods and that Bitcoin can't just pump up to 88 and then come straight back down and dump on some tariff news or the war in the Middle East or in Europe or whatever. or other issues or something that might come out in the news, because this is a very news driven market. We need to understand that so that we can help to trade the market efficiently and effectively. But while Bitcoin is in these areas here, between the 50 EMA on the weekly and the 20 EMA on the weekly, what we want to see is a break above the 20 EMA on the weekly. That's the line that we need to get above. And then I think we would move back to retest 100K. And of course, if we break below the 50 EMA on the weekly and have a full candle close below the 50-week moving average, then I think the bull market is over. Those are the lines in the sand for me. As always, thanks for tuning in. And until the next episode, or until I see you in the Discords, happy trading.